Good morning and welcome to the ASSURA PLC Annual General Meeting proceedings. As recording meeting, attendees will be in listen-only mode. Questions can be submitted via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question submitted today. However, all questions will be reviewed with responses published on the Investor Meet Company platform where appropriate to do so. I'd now like to hand you over to Ed Smith, Non-Executive Chairman. Good morning, sir.
Good morning, and good morning everyone, both here and on the call. It's now 11 o'clock, and as there is a quorum present, I declare this meeting open. For those of you who don't know me, although I've been introduced, I'm Ed Smith. I'm the Non-Executive Chairman of ASSURA, and I'd like to welcome everybody to this year's AGM. In addition to those joining the meeting in person, this year's AGM has also been made available to view via Investor Meet, the company platform. Investors watching the meeting via this platform are able to see and hear the AGM, but are not seen or heard by the board, and as made clear in the notice of the AGM, are unable to vote via the platform. Questions may be submitted in writing over the platform and will be addressed at the relevant points in the meeting, and we can see them on the screen. I'm joined here today by my fellow directors, and I'd like to introduce them briefly before we begin. Clearly, Jonathan Murphy and Jane, our executive directors, and then our non-executive directors, Jonathan Davies, Louise Fowler. We also have Emma Cariaga, Noel Gordon, Sam Barrell, and our associate Lara Nashkambandi as part of our development of next generation of PLC non-executives. We're in a board meeting today, so we're all physically present in a long board meeting, so we've stepped out to conduct the AGM. So Jonathan, it's over to you now to provide an update on the company's performance in the first quarter, which went out in our trading statement this morning.
Yes, thank you, Ed, and good morning, everyone, and welcome to the AGM. So, in terms of the update we put out this morning, we reported on a further quarter of good progress. Clearly, with the backdrop that we're all facing at the moment in terms of higher interest rates and higher inflation, I'm sure investors will understand that we have slowed down on a number of our activities in terms of new starts. So if we look at our activity going back to the year end to March, we were highlighting that we had 5 projects that we were looking to start this financial year, and one of those has now started in the first quarter. Just to put that in context, if we were to go back 12 months, we probably would have been looking at doing between 20 and 25 projects. So clearly that is a significant slowdown in new developments and new activity. And that simply reflects the backdrop that we have in terms of increasing cost of construction, increasing cost of finance, and therefore, as a result, that means that we're having to charge the NHS higher rents on those new projects. Those higher rents are clearly take longer to be agreed and accepted by the NHS, hence why we are slowing down in terms of those new activities. But in terms of the quarter, I'm delighted to say that we've completed 2 projects, and we also passed a significant milestone for the business. So we completed the 100th development that we have delivered for the NHS in the 20-year history of the company. A very significant milestone to deliver a further high quality development for the benefit of the NHS, and that is a new GP surgery in Wolverhampton, which we've delivered for the Presbury medical practice. We've also completed a further project, which is a site in Kettering, which is a new facility for Ramsay Healthcare. So this is effectively a facility that provides day case surgery on behalf of the NHS, but operated and delivered by Ramsay. In terms of other activity, we've also seen a significant number of rent reviews completed in the period in the ordinary course, and we've been able to see an increase in our organic growth as a result of that. In terms of other activity going on in the business, the good thing in terms of the backdrop is that we've had no financial events in the period. We've got no debt that is due for renewal anytime soon, and the business remains in a very strong position, in a very robust financial health, with significant cash resources and more than enough cash and facilities to deliver all of the projects that we've got on site and that we're due to start over the coming year. So overall, the business, despite slowing down in terms of new projects, business remains in very strong financial health. We've made good progress in the quarter, and we continue delivering the projects that are on site for the NHS at the moment. And that is a sort of summary of the key activity in the first quarter.
Thank you, Jonathan. So before we get to the formal business of the AGM and the resolutions and everything, this is an opportunity for shareholders to basically ask questions about the performance of the company. And we do have one on screen, which, if I can say, how does increasing interest rates affect your profits? Is any of your debt due for refinancing, and are rents rising? Good question. We talked about that at the year end. Jonathan, do you want to respond to that one?
Yes. So, as I referenced in my introductory remarks, we're in a very fortunate position in that we've got no debt that's due for refinancing anytime soon. So the first facility that we've got is we've got a facility during 2025. So between now and 2025, we have no debt coming up for maturity. We're also in a good position from the type of debt and the maturity profile we've put in place. And the vast majority of our debt is very long term. So we're over 7 years in terms of our average maturity. And the cheapest debt that we have is actually the longest debt. Most of that doesn't fall due until the 2030s. So in the short term, we've got no pressure effectively from rising interest rates. It has no impact on the business in the short term. And in terms of rent reviews, yes, well, we completed 55 rent reviews in the first quarter. So we added 0.6 million to the rent roll. So yes, we are continuing to see progression on rent reviews.
Are there any questions on the performance of the company before we get to the resolutions? Yes.
Yeah, just wondering, if interest rates stay sticky, how viable is the business going forward? Because how do you expand dividends that you're paying out, 6%-ish? The cost of capital as it is. What do you see for the future over the next 2 or 3 years if rates stay where we are or get higher?
So the question for people on the screen, because I think they can't hear you, but I can. It is, if interest rates stay high, what is the viability of the business, and how do we look forward in terms of rates of return?
Expand.
And expand.
Absolutely. So the good news is, if you take that, you sort of reference a period of 2 or 3 years. So if we look at the next 2 or 3 years, we've got almost no debt up for refinancing. We've only got one facility, which is 75 million. So over a 3-year time horizon, we'll have to refinance 75 million of debt out of our 1.2 billion debt book. So relatively modest. Of that 75 million, that's current rate is around about 3%. So clearly, if we refinance today, that would cost us around 6%. So clearly, that would cost us more, but that wouldn't be a material impact to the business. And over the next 3 years, we'll still be able to deliver organic growth, notwithstanding the slowdown in projects I referenced. The projects we're already building, they will add 4 million pounds to our rent roll this year. Our rent reviews, we've got 22% of our rent reviews which are guaranteed to go up in line with inflation. So you've got the indexation growth coming from that. And if we look at where we were at the end of March, in terms of our index-linked rent reviews, we had over 4 million pounds of rent due effectively from previous inflation. So you've got that coming through as well. So on a 2 or 3 year time horizon, you've got excellent visibility of continued growth in our top line with very little downside from the impact of interest rates. So we're incredibly well positioned. Now, in terms of the overall, your other question is about how we position for future growth. I mean, that is a really good question. And clearly, if we were to raise capital today, when our dividend yield is 6.5%-7%, clearly we would only be doing that if we're able to identify new opportunities that we're able to provide a return in excess of that. So that we are already adopting a very different approach to new projects. But if you step back and look at the macro picture, UK healthcare infrastructure is incredibly underinvested. All the political parties are talking about the need for more out-of-hospital care. So on a macro view, we're still incredibly bullish about the prospects for the sector in the long term. We just have a bit of a short-term challenge today, but we're very well positioned to ride that out.
It's not without its challenges, but we're up for it. I think is a quick way of putting it.
Sorry, maybe we are long-winded.
We are really good at what we do, and we're very much liked by a struggling NHS. But it is, headwinds.
I'm just a bit concerned. There's a bit of a spiral as rates possibly might go up further. Obviously, the sort of gearing becomes worse effectively, and the share price drops. And
the advantage of the fantastic work that Jane has done on long-term financing with average debt of 2.3% fixed for a number of years is as the Stiefel note says this morning on our trading results, market leading balance sheet strength, and we're not in any rush to do anything about that.
No.
But I think on the in terms of you think the gearing and you're talking about sort of a downward spiral, just one point to just make clear. So obviously, if you look at a loan to value ratio, our loans are fixed. They're not changing. But if our valuers decide that our values are falling, then our loan to value obviously goes higher, and that can be a risk factor for people. They look at that and go, well, look, the business is riskier than it was before. But if you step away from that and look at the actual cash flows, we've got a very strong interest cover position. So we've got very good cover in terms of the interest that we're paying. All our debt is fixed, so that's absolutely solid. And the projects that we're completing now and the rental growth that I mentioned before will all improve that interest cover because our interest cost is absolutely fixed. So we're in a very fortunate position that because we are very well capitalized with an excellent debt book, effectively our short-term financing metrics will improve rather than deteriorate. So even if the environment, even if interest rates even higher, the actual impact on our day-to-day cash flows is zero. So we're in a very good position in that sense.
I have another question on screen. What is the current ECG ratings of your properties? How many need improving, and who will pay for it?
Okay, so in terms of our EPC, I presume it means EPC, which is our
EPC,
energy performance certificate. So the current portfolio has 53% of our portfolio is EPC B or better. We have a plan to have 100% by 2026, so we've got a further 3 years to deliver that. That's well ahead of most comparable businesses. The good news about the type of assets we build is that they are relatively uncomplicated buildings. So we're sat here in a London office block which has got very complicated air conditioning facilities and lifts and infrastructure. Our buildings are much more straightforward, and so we don't have the same level of challenge around our EPC performance. And our portfolio is relatively new. So the average age of our building is 19 years. So we most of our stock is modern, purpose-built stock that's relatively easy to update. So 53% EPC B or better, and a plan for that to be 100% by 2026.
On the journey. I have another question, which is quite a long question. I see recently the MD of Saga has directed his board to personally accumulate for their own finances over the next few years, and continue to own over a minimum set period a multiple of their income in company shares as a requirement to remain part of the executive incentive package. Is this something that your company would also seriously consider an action as a formal policy of ensuring management commitment? As a shareholder, I would encourage you to look at this, as it certainly makes the director remuneration incentive package more palatable. I think you can answer that with respect to yourself and Jane.
Yes, absolutely. So in terms of our personal shareholding, we have personal shareholding requirements as part of the remuneration policy. A third of any of our bonus is investable in shares, and Jane and I have just bought shares in the ordinary course as a result of that. And in terms of share options and anything that gets awarded, they have a lock-in period of 2 years, and we're not allowed to sell them unless we're in excess of those requirements. And in fact, we are net investors in the shares, not sellers. We'll continue to remain very, very invested in the stock. As both executives and shareholders, we're very, very closely aligned to the shareholder performance.
Good. And then a question from Kevin. Should the governing party change at the next election, is there any predicted impact on the business?
Well, that's a tricky one. I think probably most people are expecting there could be a change of government at the next election. From our perspective, clearly, if there was to be, let's say, for argument's sake, a Labour government, a majority government, which most people actually may not be the most likely outcome, but let's say there is a Labour government, where does that leave us? The good news is that we have regular conversations with all the political parties, as I'm sure you understand, and the policy direction of Labour is very supportive in terms of investment in out-of-hospital care and investment in out-of-hospital facilities, and clearly that would underpin further demand for our assets. It's also really noticeable that some of the language that the Labour Party are using now is very different to 3 years ago. So if you think, not 3 years, but you think back to the last election with Jeremy Corbyn, there was quite a negative tone around private sector involvement in healthcare. That negativity is now gone. I think there's much more of a sort of pragmatic, business-friendly approach being adopted. So overall, a change in government for us would perhaps be an opportunity for an acceleration of investment in primary care. And in fact, the policy document that Labour published just a few weeks ago is very supportive of the expansion of primary care provision. Doesn't explicitly say and therefore build more buildings, but that would be an obvious conclusion from that. So we think overall it would be probably a net positive for the business.
Thank you. And James' question, you have a stable A- rating. What would cause the rating to fall?
Maybe let Jane cover that one.
Yeah, you're right. We do have an A- stable outlook on our rating. When they pull the rating together, they use a number of factors. Jonathan alluded to cash flow, and Fitch, who provide our rating, they very much look at the underlying cash flow. So they're looking at interest cover, they're looking at net debt to EBITDA, and to a lesser extent, they're looking at loan to value. We would need to see our loan to value be maintained for a sustained period well above 40% before they would cover it. We would also need to see our interest cover fall. So our covenant is 1.75 times. We are at 4.5 times. And as Jonathan said, we're actually predicted to improve that cover. And our net debt to EBITDA at 9 times is perfectly within the range that Fitch have set. So I have no concerns at the moment. A rating movement would be from an A- to a BBB+, which is a very, very strong investment grade business, even at a BBB+, but I'm not seeing anything to indicate that we would fall from the A- at this moment in time.
Any further questions? Would you like to ask your question and say who you are, and I'll try and summarise your question for you for the benefit of people on the screen.
Yeah, there's a bit of an intro and then a question. So hi, I'm Melanie. I'm here today on behalf of Share Action, which is a charity that campaigns for more responsible investment on social and environmental issues. So my question is regarding Assura's policies related to the insecurity of work, particularly for lower paid employees and contracted workers. First of all, thank you for your recent engagement with Share Action on the topic of living hours. I'm delighted that Assura is a living wage employer. This is one of the most important steps an employer can take to alleviate in-work poverty. However, the number of hours worked and the security of those hours can also significantly affect the amount of pay that employees take home. That's why the Living Wage Foundation has established a living hours standard, which presents employers with the opportunity to provide staff with security and stability. Living hours accredited employers commit to providing workers with decent notice periods for shifts of at least 4 weeks, with guaranteed payment if shifts are cancelled, the right to a contract that reflects accurate hours worked, and a guaranteed minimum of 16 hours a week, unless the worker requests otherwise. Share Action's been working in this area with coordinating a coalition of institutional investors with 3.7 trillion in assets under management. Following successful engagement on the living wage, its members are now engaging with companies on insecure work and promoting the living hours standard as a marker of responsible business practice. So my question, I'd like to ask the board whether they have given consideration to the issue of insecure work, and whether the company will become a leader as an early adopter of the living hours standard. And finally, would Assura be willing to meet with members of the Good Work Coalition, the Living Wage Foundation and Share Action to further discuss this?
So the question is about the way in which we approach our employees with respect to working hours, living wage, general engagement around work and remuneration, and our commitment to being a good employer with respect to unsocial hours and other things. And that's a sort of quick summary, probably not do you justice, but it's grateful. I'm grateful that you gave us a question in advance. I know Jonathan will want to respond fully to your question.
Yeah, absolutely. So, I mean, I guess the first thing I would say is that, we take our responsibility for social impact and sustainability incredibly seriously. And in fact, it's an absolutely central tenet of the business, and it's the way we run our business on a day-to-day basis, and is absolutely central to our operations. We're a healthcare business. We operate in an environment where we are trying to improve the health and well-being of the individuals impacted by our buildings, and that runs right the way through our organisation, our culture, and the way that we operate. We are a national living wage employer, and we commit to that both as directly as an employer, but also we promote that through our supply chain, through the partners that we work with. Anyone who wants to be a partner or a supplier to Assura has to share our values and has to share our ambition to promote social impact and sustainability, and that's right away across everyone that we work with. So the broad thrust of our approach is entirely consistent with the ambitions and the aims of your organisation. In terms of that specific point, I'll be entirely honest. We haven't directly looked at the minimum hours requirement within our direct employment or within our supply chain. To a certain extent, it's likely not to have a very significant proportion of our supply chain. If you think about our operations, in terms of our head office team, our directly employed team, it's not relevant at all. They're all well within the parameters that you're talking about. In terms of the work we employ directly, again, largely professional services firms, largely major contractors. They will absolutely be well within those parameters. But it's something we haven't explicitly required as part of our supply chain. It's not it was an element of the living wage commitment that I'll be honest, until your question came through, I wasn't really aware of. I think it's very unlikely that there's anyone within our entire supply chain that is impacted negatively by the issues that you raise. But we're certainly happy, as you suggest, to have a follow-up discussion and understand the issues more, and just make sure that there aren't further things that we'd be able to do.
Good, thank you. I say this, through COVID, we put people first as our motto as a board. All of my board colleagues with us look after our people, because by looking after our people, we look after our customers, we look after our suppliers, and that has continued. And with our Assura Foundation, we have a very strong sense of social engagement. I think as a company that has essential provision to our great National Health Service, you'd expect us to have much of that. But as Jonathan says, continued engagement and watching that brief is important. If there are no other questions from the room, there are no more questions on the screen, I have the joy of turning to the formal business, if I can get my machine back up. And so you have to, I'm afraid, listen to the script. We now proceed to the formal business of the meeting. This consists of the resolution set out in the notice of the meeting dated 1st of June 2023, which was sent to you together with an explanatory circular and the annual report, which I have to say is an excellent document. As mentioned in the circular and as permitted under Assura's Articles of Association, I direct that all business to be transacted at today's meeting be voted on by way of a poll. This will result in a more accurate reflection of the views of shareholders by ensuring that every vote is recognised, including the votes of those shareholders who are unable to attend, but who have appointed proxies for the meeting. Shareholders present and in person, corporate representatives and proxies are entitled to vote. The notice of meeting includes 17 items of business for your consideration. An explanation of each of these is included in the AGM circular, but in summary, they are as follows. Resolution 1 covers our annual report and accounts for the year ended 31st of March 2023. Resolution 2 seeks approval by way of an advisory resolution of the Directors' Remuneration Report for the year ended 31st of March 2023, contained in the annual report and accounts. Resolutions 3 and 4 are our audit-related resolutions. Resolutions 5 to 12 cover the re-election Louise Fowler, Jonathan Murphy, Jane Cotton, Jonathan Davies, Sam Barrell, Emma Carriaga, Noel Gordon and myself as directors. And resolutions 13 to 17 cover capital and other issues, including authorisations relating to the allotment of share capital, the disapplication of preemption rights, the repurchase of shares, and the notice period for general meetings. Resolutions 14 to 17 are proposed as special resolutions. So, got that bit done. Does anyone have any questions on any of today's resolutions before we proceed to voting? I will explain the voting procedure further in a moment, but I would mention now the fact that because all resolutions will be voted on by way of a poll, these resolutions will, in effect, be voted upon simultaneously rather than sequentially. Accordingly, this is the one opportunity in the meeting for you to ask any questions you might have before I invite you to vote on those resolutions. So if there are any questions on the resolutions, and this screen's gone blank, do you know
Do we need a password?
Which machine? Whose machine is that? Oh.
Are there any questions in the room on the resolutions? By the way, sir, it's nice to see you back for another year. You've not been before? You have? Thought you had been. Oh, we have no questions on the screen and no questions in the room. Right. I'll now explain the poll procedure. The company secretary, Orla Ball, will act as scrutineer in connection with the poll. She will be assisted by a registrar's Link Asset Services. Only shareholders or their proxies or corporate representatives are entitled to vote at the meeting. To vote on the poll, you will need the poll card, which you were given on registration today. If you wish to vote on the poll in more than one capacity, you will need a separate poll card for each capacity in which you vote. If you need a further poll card, please put your hand up and we will pass one to you. Those shareholders present who have returned a form of proxy need not complete a poll card unless they wish to alter their voting instructions. However, if a shareholder now completes a poll card, any proxy vote given by that shareholder will be cancelled. When the poll procedure commences, you should insert on your poll card in the places indicated the full name of the shareholder. If you are using the poll card to vote only some of the shares registered in the shareholder's name, but not all of them, the number of shares you are voting with the card, and a cross in respect of each resolution to indicate that you are voting for or against or withholding your vote. If you wish to vote some shares for a resolution and other shares against it, you should also insert the relevant number of shares alongside the separate crosses that you insert for that resolution. You should then sign the card in the place indicated. The cards will be collected at the end of the poll procedure when I have declared the poll closed. Are there any questions on the voting procedure itself? Good. The poll will now commence. So are there any shareholders who wish to vote in the room that have not already done so? I think in that case, we can move on, and I can say that everybody who wishes to complete a poll card has done so, and we have all received all the proxies. So the poll is now closed, and the results of the poll on each resolution will be determined by Ms. Ball as scrutineer. This will take a bit of time, and the results will be announced through an RNS to the market as soon as practical. We expect this to be sometime later today. If you'd like to see details of the valid proxy votes lodged at the relevant proxy cut-off time, these are available from Ms. Ball. That concludes the annual general meeting. Thank you very much for attending, and see everybody next year. Thank you very much.
Thank you very much indeed to the board for updating attendees today. Can I please ask attendees not to close the session, to be automatically redirected to provide your feedback in order the board can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the team. On behalf of the board of ASSURA PLC, I'd like to thank you for attending today's annual general meeting proceedings, and good morning to you all.